Hello and welcome to today's Where's the Trade. My name is Joshua Bellinger of OptionSizzle.com, and today we're going to look at TD Ameritrade holdings and the large call buying that occurred in the August 23 strike. So taking a look here where my cursor is at, you see that 42,000 contracts traded with an open interest of 483. So the top trades on this, and we can look in the statistics here on Thinkorswim, which is owned by TD Ameritrade. You see that the top trade is a 37,000 block that traded on the offer at 25 cents. Now this wasn't a trade that was executed on any platform. This was a trade that was called into the market maker, having to find the other side of it. And there was some blocks that traded with it that would look to be tied to it. Now, being that it's tied to it, I'm not sure if it's a replacement of stock or if it's some type of volatility hedge. But we'll try to piece the puzzles piece the puzzle pieces together here. The other interesting action was going on in the May 2050 calls, which are shorter term and obviously looking for a move above 2050 here, and those were buyers. So if we take a look here, and what we're looking at is a 10-year monthly chart. So the actions occurring in August, this has time, but you see that TD Ameritrade has pretty much been in a range, and looking at a longer term time frame, it is pretty obvious, and that's why you need to always look at longer time frames, because it hasn't really done much for going all the way back into early 05 or late 05 going into early 06. So this has been in a very consolidated range, going from just about $13 into about $19.50, and you can see where it backed off today, and this is a monthly candle where it's forming like that. So keeping that in mind, eventually this is either going to break up or break down. It's been consolidating for a good amount of time. Now, the thought that I have, and I'll share with you, is that the TD Ameritrade CEO was just on CNBC a few minutes ago, and one of the thoughts that I have is that, being that the market has started a bullish trend and it is bullish here, we could see more individuals getting back into the marketplace, which would obviously benefit them. Also, there's some new option instruments that are going to be released in March, which I have a article on www.optionsizzle.com talking about the new mini options. So you could see a little bit of bullishness possibly if the market stays where it's at, and if it continues to trade higher from these levels, more people getting into the marketplace, which would generate more commissions for them. Now, keeping that in mind, and just at my little quick thesis there, one of the trades I would be really interested in playing is targeting this level here and putting on a butterfly trade. And it's really interesting because this 1 by 1 by 1 can be bought for a 3-cent debit. So you have a long exposure trade with 169 days, looking forward to pin at this level at 23. Now, if you open up a little bit more to give yourself a net, you can go 24 and just lower it down here, 21, and now you have it 20 cents debit. That makes it a little bit more intriguing. That's a bullish trade. 20 cents to have a trade on for 160 days. If you're bullish, looking for it to break out, this would be a trade that you would want to look at.